Welcome everyone to Vested Interest. It is Shane back again for another stock pick of the day video. It is November 9th, my wife's birthday today. It was my mom's earlier this week, so happy birthday to my wife Brianna. We will be having dinner here, so I'm going to pump this one out and spend some time with her tonight. We are going to take a look at Ethan Allen, and this one is courtesy of one of the subscribers to the channel, Tony Myers. Thoughts on MOV and ETD. We are going to look at ticker ETD. This is Ethan Allen. This is similar to Haverty Furniture Company. This is a furniture company out of the consumer discretionary sector. Let's jump right in and take a look at it. And Ethan Allen is more of probably a brand you would recognize more so than Haverty Furniture. Again, Haverty Furniture is more of a regional store, really homed here in Michigan and some of the surrounding states, whereas Ethan Allen, I think, is more of at least a nationwide store. I've seen these brands, or this brand in particular here, whenever I lived out in California, whenever I lived down or over in Utah, whenever I lived down in Texas, and here in Michigan, I see this one as well. So this one is probably a little more well known than Haverty Furniture. Let's jump right in. Now, if you want to know more about this company, check them out at www.ethanallen.com. That's www.ethanallen.com. That is their homepage where I pulled this information from. And 1932 is whenever they got their start. Nat, Ansel, and Ted Baumritter, I hope I'm pronouncing that right, found a houseware sale agency in 1932. They sell plaster, gnomes, trellises, and garden swings, all made by someone else. In 1935, Viva Vermont, determined to take control of their destiny. Nat and Ted purchase a bankrupt sawmill for $25,000 and start manufacturing home furnishings. So this is when the home furnishings portion of the business started. Manufacturing home furnishing, we fell hopelessly in love with Vermont and with what New England represents historically. And then in 1960s, name it, claim it. We officially changed our company name to Ethan Allen. So this is whenever they really became the Ethan Allen Company in 1969, and we began manufacturing directly to consumers rather than to furniture retailers. And the rest, as they say, is history. And they provide living, dining, bedroom, office, home furniture, outdoor furniture, lighting, rugs, flooring, and decor. So they are a one-stop shop for your house furniture and furnishings needs. Again, www.ethanallen.com if you want to know more about the company. Now, the reason we are taking a look at them down 3.14% on the day, we are talking about Ethan Allen Interiors, Inc., ticker ETD. This is out of the consumer discretionary sector. This is a furniture company here. Closed the day at $25.90. 52-week range as low as $24.76, as high as $36.20. So they are right up against their 52-week low. Average volume 216,000. Today was 145. So clear sell-off throughout the day. Again, down 3%. Well, a little bit of a recovery there around noon, but then right back to it. So a little bit of volatility throughout the day, but overall a sell-off nonetheless. Market cap of $657.842 million. A beta of 1.24, so they are more volatile than the overall market, and you can see that volatility. Price to earnings ratio, much like Haverty Furniture, right in line with it actually at 7.32%. I think Haverty Furniture was at 7.4, so pretty close to where they're at as well, but that's a low PE ratio. You're paying $7.32 for every dollar of their earnings, which is very low. Earnings per share, EPS sitting at $3.54 per share. Next earnings date is coming up sometime between January 23rd through January 29th of 2024. Forward dividend is $1.44. Now they have a very high starting dividend yield, 5.39%. Very nice starting dividend yield on this one. Ex-dividend date, November 6th. So we just passed that last ex-dividend date. So you would not be in line for the next dividend payout if you were to buy them now. And according to Yahoo Finance, where I pulled this information from, they have a one-year target estimate of $33 per share. I am not affiliated with Yahoo Finance, just one of the sources that I like to go to for information. Now, I like to get into statistics and look at dividend yield theory to see if there is potential undervaluation. To do that, we go down into statistics, down to dividends and splits. We look at their 5-year dividend yield average of 4.5%. We compare it to their current 5.39, or over here, forward annual dividend yield, 5.39, same number. And since this is higher and much higher, it speaks to some potential undervaluation. So according to dividend yield theory, this one is potentially undervalued and significantly undervalued at that. Payout ratio is very low on this one, 38.42%. I like that. That gives them a lot of room to increase their runway. So not only do they have a very high starting dividend yield, they have a very low payout ratio. So they can continue to pay down debt, pay off any debt, make any acquisitions, pay out their dividends here. That are all the things that you do with free cash flow. And let's keep rolling through this one. We're going to look under financials. A lot of good information you can find under financials. You can look in there and find their income statement, their balance sheet, their debt to equity ratios. Is their revenue growing? How do their margins look? A lot of good information in there that you want to be looking at if you are interested in buying a individual company's stock. That's the type of deep dive you need to do. For this one, we are going to look at free cash flow. We want growing free cash flow over time because we want growing dividends over time. So 2020, you can see here, looks like 36 million. 2021 up to 117 million. 2022 dropped down to 55 million. 2023 86 million. And it looks like to date here in 2023 64 million. So overall, growing free cash flow from 2020 to date. They were repurchasing some of their shares back here in 2020 and 2021, but they have not been doing so recently, which is not a huge deal. I would like every company to be repurchasing its own shares, but especially whenever they are so low or right up against their 52-week low. But maybe they will restart that again here in the future, but for now they are not. But overall, like I said, growing free cash flow from 2020 through 2023. Even though it is a bit cyclical. Like I said, big jump up here in 2021 and kind of has come back to where they should be or where in line with where they were in 2020 anyway. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. You pick any sources that you like. I just pick these two because I like the information that they give. Stockanalysis.com goes back a little bit further and presents it in a different manner than Yahoo Finance. And it gives me a way to back check to make sure the information I am getting is accurate. And that is the reason you should have more than one source as well. Make sure the information you're getting is accurate and up to date. Now, according to the two stock analysts that are taking a look at this, which is not a lot, they call it a consensus buy. They have a low estimate of $31. It currently sits lower than their lowest estimate. So that would be a 19.69% increase in the stock price if it came up to their lowest estimate. They have an average estimate of $35.50, which would be pretty much in line with what we saw with Yahoo Finance, which would be a 37.07% increase in the stock price. And if it happened to hit their high of $40, that would be a 54.44% increase in the stock price. All the while, you could collect that 5+% dividend yield. Now, I like to get into statistics here, look at return on equity and return on invested capital. I like 10% or better or in line with its industry average. Return on equity on this one, 19.9%, almost double the 10% that I look for. And return on invested capital, just over the 10% at 14.63% that I'm looking for. So good numbers overall here. They did not have growing revenue forecast or EPS growth forecast over the next 5 years. I like 5% or better here, so I would need to do a little bit more research to see what they're expected to grow or if they're expected to decline over the next 5 years. You could look that up. If anyone has another source that provides that information, go ahead and drop it down in the comments section below. Help us out on this one. And thanks for watching. Don't forget to subscribe to the channel. Help us grow this channel. Drop a comment in the comment section below. Share with anyone you think that might find value. Hit the thumbs up, the like button there. That really does help out a small YouTube channel like me. And hit that notification bell so you're notified whenever we put out any new content. Let's keep rolling here. And again, we're going to look at the dividend payout ratio, 40.68%. So again, I know it was 38% or so that we saw in Yahoo Finance. Call it around 40%. Either way, still a lot of room to pay down debt, to make acquisitions, to increase that dividend over time. That is what we want to see. So I like 75% or lower. So this is much lower than what I'm looking for. And this is a good sign. Dividend growth, even with a very high starting dividend yield of over 5%, their dividend growth is 12.47%, smoking high. That is awesome, double-digit growth with a very nice starting dividend yield. Now, went back to January 2021. They have been paying a dividend since 2014, a growing dividend at that, but I only went back to 2021, 25 cents. Big, these must be special dividends. I do notice that they don't really pay out on a set time frame. January, April, May, August, January, February, May, August, January, February, May, August, November. So they pay out their regular dividends, but it looks like they also, I don't know if these are special dividends because they're significantly higher, a couple of these. So I'm assuming these are just special dividends in here, but they go along with that same time frame of, May, August. So I'm not sure if that just happened to be higher than normal payment or what that is, but these ones are definitely outliers, right? But for the most part, they have growing dividends. 2021, they were at 25 cents. I'm going to jump over these two that they paid out $1, which is very nice. They're returning a lot of capital to their investors, so that's very nice to see. But let's get back to what their regular growth is. 2021, in December, they raised it up to 28 cents and some fractions of a penny. May 9th, 2022, they raised it up to 32 cents. Here's another one of those in August. So maybe in August they just pay, yep, there's another one in August. Maybe in August they just paid that special dividend or a higher than normal dividend because, again, August they paid $1. May they paid $1. Here in August 15th, 2022, they paid 82 cents. December 2022, they paid 31 cents. Raised it up again May 8th, 35 cents. Here's that August special payment. So I'm just assuming that in August you're going to see a higher than normal dividend. And then November 6th, 36 cents. So they have been aggressively increasing their dividends and paying out some special dividends along the way. Again, if you are a shareholder of this one, you have been mightily rewarded with dividend payouts over the years. So very nice to see, very good numbers overall. I would need to do a little bit more research to see what their revenue and EPS forecast and look at their books a little more to see how they are growing over time. But overall, not a bad one. If you are looking for something in the furniture space, this one might be one to take a look at. This is the vested interest stock screener. This is how I set up the videos as well as how I look at a company on a high level to see if I'm interested in investing. If it meets the criteria, 5 of 8. If it's not a company like a bank, if it's a bank, I add in price to book and must meet 6 of 9. Then it goes into the investable pile, and then I do more of a deep dive into the financials of the company and do a discounted cash flow analysis on it to see what I'm willing to pay. Well, that is it for this one. Let me know what you think of Ethan Allen. Have you heard of the company? Do you perhaps own some of their furniture? Are there other ones in this sector that you like? Again, Haverty Furniture is one in my portfolio that I added recently. I do like this one as well. More of a well-known company. I believe Ethan Allen is a brand I'm aware of. So maybe one that you're more familiar with and maybe you're more comfortable with it. I chose Haverty because it is a Michigan company, and I like to support my home state whenever I can. But this one definitely looks attractive as well. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Building a community of like-minded dividend growth investors so we can share videos like this of stocks we're looking at, stocks we're watching, stocks we're buying, or maybe even ones we're avoiding. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company, and this one was recommended by a subscriber, so if you have a company you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing during educational and entertainment purposes. Investing involves risk. You can't money. Should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.